Hey guys, this is your girl, Ashira Nelson from SavvyGirlMoney.com. Thank you for joining me again on my YouTube channel. If you have not done so, make sure you go subscribe now. And if you don't have a YouTube account, I promise it takes less than 3 minutes to quickly create an account so that you can subscribe. 2018, my whole focus is on building my channel up. I'm trying to get my subscribers up and just increase the whole Savvy Girl Money brand. So please make sure you join the Savvy Girl Money community and subscribe to my channel. Per the request of one of my really good friends, I am bringing you this week's video titled Understanding Your Payroll Taxes. So I remember when I first graduated from school and I got my first job. I did not understand all the taxes that was being withheld from my paycheck. I had a federal tax coming out, a state, a local, something called Social Security, Medicare. It was like at that point, like, what are all of these things? And at the time I had to find out. I couldn't just have them taking all this money out and nobody explain what was going on or me not try to understand. So if you are new in your career or this is your first job, this video is for you. Or if you honestly been working a job for years now, but you never took the time to actually understand what these withholdings were for, this video is going to be a quick, helpful guide to help you understand all of the withholdings withdrawn from your paycheck. So let's get started on the fun. So the first item that you normally will see on your paycheck is for federal taxes. All employers, no matter what company that you work for, are required to withhold federal tax. Only way around not seeing federal withholdings coming out your paycheck is if you are a 1099 contract worker, meaning that you come in, work for a company under your own rules. Sometimes you'll see this for like a graphic designer doing work for like a corporation. They are creating a project. They are not under the strict schedule or rulings of this corporation. So the corporation actually issues them a 1099 at the end of the year versus a W-2 that takes out, or a paycheck that withhold all of these taxes. So federal taxes is required. If you work for a company, it has to be taken out. And your employer or a payroll service company uses your W-4 that you fill out when you first start a job in order to determine how much withholdings will be withheld for federal tax. And what the payroll company or your employer do is look at withholding tables. And I want to show you an example here of a withholding table. So to kind of break down what you'll see on a withholding table is you determine your pay period. Is your pay period weekly, bi-weekly, semi-monthly, or are you getting paid like once a month? Your pay period determines first which table you're even going to look at. And then from there, it looks at your marital status. Are you single? Are you married? Then you either go to the left side or right side of the chart. And they also take into account your withholdings, the actual withholdings that you wrote on your W-4. And that was just to give you a breakdown so you can understand the withholding table. And for state taxes are pretty much handled the exact same way as federal taxes. So for the state taxes, we look at the state withholding tables, and each table varies based on your state. So make sure you go to your state website to check out the tables there. And your city taxes. Your city taxes also use tables and schedules to determine your withholding amount rate. I work in Beechwood, and that's Beechwood, Ohio, and my city rate for the city of Beechwood is 2%. So you pay city taxes or your locality tax based on the city you live in and work in. Next up, we're going to talk about FICA taxes. FICA is made up of two different types of taxes. That is Social Security tax and Medicare tax. So Social Security tax for 2018 is 6.2%. But we have a taxable wage basis of $128,400. So there's like a cap. So if you're at the cap of $128,400, you're only going to pay Social Security taxes, the 6.2% up to that amount. Then anything over that, you don't pay Social Security taxes on. That's kind of nice. So for high earners, you're only paying at that base limit, that cap. Once you reach the cap amount, you don't have to pay Social Security taxes anymore. For the other half of FICA, which is Medicare tax, don't have that base. So you will pay for 2018 1.45% of your income. So no matter what your salary amount is, you're going to pay 1.45% on the entire amount. And Medicaid have this other additional surplus tax to it. If you are over a certain amount, so for single individuals, if you're at $200,000, or for married individuals, if you're at $250,000, you have to pay an additional 0.9%. And this is called the additional Medicare tax. Unfortunately, I don't know who thought of this, where it came from, but it's there. And I want to make you guys aware of all 5 of the standard taxes that is withheld from your paycheck. So the withholding tables changed because of the tax law changes. And I wanted to make sure you not only understood what was being withheld from your paycheck, but just know that the withholding rates has changed. And like I said in my Trump video and the new tax law video, some of the rates have, well, most of the rates for individuals have reduced and for corporations have reduced. Not by a lot. And they also stated that in February you will see some changes to your paycheck. These are those changes. Your withholding rates are changing. Like today on Facebook, I seen one of my friends say that she saved about she's seen a increase in her paycheck by $26 or $27. That's because the payroll withholding rates changed. The rates went down, which increased your paycheck. And this is a good thing. I don't care if it's $5. I don't care if it's $20. I want my money. That stuff adds up. It adds up. So this video was a quick overview, and I wanted to give you guys a little more information and answer some more of your questions. So please stay tuned and check out this question that I answer from my Facebook page, and I have a special guest. So check this video out. So guys, since the payroll video was short, gave you the information and got right to the point, Skylar has joined me, and we want to talk about a Facebook question that I got from one of my Savvy Girl Money followers. And the question was, okay, so I filed my taxes last night and they have been accepted. But when I read up on it, it say that the earned income tax credit won't be accepted, reading this from my phone, won't be accepted until after February 27th, 2018, that is. Does this mean I won't receive all of my refunds at one time? Or will I just have to wait until the end of February?
And guys, make sure you comment below, is this video good or bad?
Definitely comment below. And they need to give this video a what?
A big thumbs up.
Definitely give this video a thumbs up.
And hit the like button right there side the corner.
Definitely hit the like button.
Yep.
The like button is very important, guys.
And the like button is over there and over there and over there.
You can tell she's experienced at this whole YouTube thing. She's a pro. She be getting me together. Okay, so to answer one of my questions from my Facebook page, would you want all your money at one time, or would you want your money like now?
At the one time.
At one time? Now or later?
Like, probably later.
Later you want your money? Well, to answer your question, so just know one thing, that if you have the earned income credit, the IRS by law cannot pay out any refunds until after February 15th. So it's really like the third week of February. The IRS is going to be giving out refunds. Say IRS.
IRS.
Refunds.
IRS refunds.
So there's definitely going to be a delay. And it's the second half of that it doesn't mean that I won't receive all my money at once. The IRS will never like split your refund in half. They're going to give you all of your money at once after February 15th, so about that third week. So you're definitely going to have to wait until the end of February if you are filing a earned income tax credit on your tax return. So I hope I answered your question. What did you want to say?
Guys, when you got money and then your parents gave you it already, don't spend it today.
Absolutely.
Because that means you won't get no more money.
Exactly. You have to manage your money wisely, right? Don't spend it all at the store at once. You have $5, you need to spend one of the $5 and save the rest for later, right? Don't spend everything at once, right?
Yeah. Right. Don't spend it for a house. Well, you could probably spend this for a house, all your money for a house. Well, if you want to, but...
So how would you spend your money?
I would save some and then get the rest to the people.
Okay, y'all heard it here. Skylar will first save some of her money and then spend the money and give it to the people. You always pay yourself first in your savings and then give the money to the people. And the people are the stores. So thank you guys for watching our quick little clip at the end of the payroll video. Don't forget to subscribe and give this video a
thumbs up.
Thumbs up, baby. Talk to you guys next week.
And I hope my dad is watching this one.
Her dad's watching it. Hi, Daddy.
Okay, let's get on to...
Bye, guys.